spend all this time and energy building the business, and you rarely think, okay, what's the exit? Because you're so focused on the present state, not the end state. But the number one question that you should be thinking about is, for someone who might buy my business, what is it they can get from me that they can't get anywhere else? And so how do I differentiate? How do I provide something unique? And how do I put myself in a position where a great buyer is willing to pay a huge premium as a result?
You're listening to Freight Famous, presented by Rose Rocket, bringing you the people that make trucking move. From behind the scenes into the limelight. Here's your host, Justin Bailie.
Hello, everyone, and welcome to Freight Famous, a podcast produced by Rose Rocket. New episodes of Freight Famous will be released twice a month. On this podcast, we talk with guests about how they build, scale, and automate their trucking business. I am your host, Justin Bailie, co-founder at Rose Rocket. I'm thrilled today to welcome my guest, Benjamin Gordon. Ben is the founder and managing partner of Cambridge Capital. He draws on a career of building, advising, and investing in supply chain companies. Prior to Cambridge Capital, Ben built BGSA Holdings into a global leader in M&A for the supply chain sector. As CEO of BGSA, Ben led the firm's efforts, advising on over $2 billion worth of supply chain transactions. Other career highlights include founding 3PLX, the internet solution enabling third-party logistics companies to automate their business, advising transportation and logistics clients at Mercer Management Consulting, and working in his family's transportation business, AMI, where he helped the company expand its logistics operations. Welcome, Ben.
Justin, great to be with you again. Thank you.
Yes, thank you. I do want to mention that the bio we received was actually far more extensive. We did have to chop it down just in the interest of reading a bio in an efficient manner. But I would be remiss if I didn't highlight that there was an exceptional amount of volunteer and community building pieces on there, which I'd love to hear about maybe at some point in the chat today, because I think those things are those take a lot of effort and a lot of a lot of goodwill. So I think it's definitely worth noting that there was it was actually quite impressive to read through that. So good on you, and maybe we can get into that a little bit later.
Thank you. I'd love to.
So I think today and just maybe for some background is Ben and I have known each other probably going back about 3 years now. Ben and I worked towards hopefully doing some work together. Anybody in the sort of startup, private equity or venture market knows that sometimes doing deals can be, oftentimes they're hard to do and they don't always work out. In this case, they didn't, but I always remained really impressed by Ben, and he left a lasting impression with me just because of his thoroughness, his knowledge, his really deep connections in the industry. And for those, and there's a lot of you, I think, that follow his newsletters, maybe you've been to his conferences, you certainly know the name. And today we're going to want to try and put some context, behind the man that I think you've all probably at least seen, via the interwebs or emails. And so I think, Ben, it's an interesting time, from a macroeconomic, perspective. We're finishing off 2022. We're just nearing the end for a timestamp here. And I think that as we sort of move into a more bearish or tepid market into next year, I'm really curious about how you're thinking about right now, the M&A space, and how things are changing, if they even are at all. So I'll kind of leave that a little bit open-ended, and would just love to hear some thoughts around M&A, particularly obviously in supply chain.
Yeah, well, the reality is that the M&A activity in logistics and supply chain is as high as it's ever been. How that translates into results may be different, but the interest levels are super high. So I'll just give you a couple of examples. If you look at the mega deals, I think you're going to see fewer mega deals in the next 6 months than you did last year and before, for a couple of reasons. One, valuations are down. Two, more importantly, the debt markets are down. So if you were going to make a $1 billion acquisition of a company last year, and you were going to, if the banks were willing to lend 6-7 times EBITDA, you'd pay 10 times EBITDA or maybe more, because you could borrow so much. Well, now you can't borrow as much, therefore you can't pay as much. And in some cases, the big deals just aren't getting done. But guess what? most deals in logistics aren't billion-dollar plus deals. So when you look at the mid-market, kind of deals in the 50 to $500 million value range, we see as much activity there as we did last year and the year before. In addition to that, on the venture side, yes, valuations are down. And yes, companies that remembered how high valuations were last year are now giving pause to going back to the capital markets and raising again. But guess what? Deals are still getting done. We're still investing. I mean, look, this year we invested in Bird, BYRD, which is a high growth software for e-commerce fulfillment powerhouse in Europe. Business grew nearly 3x last year, and it's continuing to grow this year. And we invested about $40 million in that business. So, and then similarly in the cold chain logistics and food logistics arena, we at Cambridge Capital invested in a recapitalization, bought a majority stake alongside management in a company called Boa Logistics, also just a few months ago. So, deals are still getting done. We're certainly still deploying capital. And I think while the mega deals may be on hold in the growth side of the world and the middle market side of the world, there's still lots of activity.
Yeah, that's super interesting. I think we're somewhat seeing the same from our side. I think it's slower, and I think if you just if you read the news and you get kind of sucked into that, you're going to see a lot of negativity. But I think there seems to be, I would suppose in some cases, and I want to ask you this, do you think that there's an opportunity going into next year where maybe deals are more attractive because of the market? So you have potentially people with more dry powder on the sidelines looking to be active in that space, buying in the first down market in half a decade, or longer, quite frankly. Do you see some opportunism? Or is that, when you talk sort of your people and your connections, is that a philosophy that people are looking to employ?
Yes, but I think it's worth highlighting, that history tends to repeat itself. Yeah. And so I remember, you alluded to my first company, Threeplex, which was a SaaS TMS company. Well, I founded it in 99. 99 was a boom year. It was kind of like 2021. And then 2000, March 11th of 2000, the NASDAQ peaked. It was at, I think, 5,000. And I think year end, it dropped, 70%, a staggering amount. And so, you then saw 2000 and 2001 were really a nuclear winter for the tech world. But, then deals started happening and capital started getting deployed. And 2002, 2003, things started to come back. We saw the same thing happen 2008 and 9, the economic recession and global financial crisis. But really, people in the freight world know that the recession in freight started 2 years earlier in 2006. So we had 2006 to 2009, a long, painful winter in freight, which led the economy into a recession. But deals started to come back 2010, 2011. Last thing that I'll say is, if you ask yourself, what was the greatest value creation story in supply chain in the last dozen years? The answer, in my view, would be XPO Logistics. And in 2011, Brad Jacobs bought a majority stake in Express One. We played a tiny role in it and co-invested with him, and rebranding to XPO. And that business grew 50x in value. If you bought stock in 2011 alongside Brad and Cambridge and others, you would have been up 50x, at least through the year end last year. So, I think great opportunities come in these kinds of times. The challenge is always, number one, knowing when you've hit bottom, right? The reality is that maybe we've hit bottom now, or maybe it's not for another year. Neither you nor I know that for sure. But certainly in 2011, people felt that way too. And obviously it worked out pretty well for Brad and XPO. So I think for people that have the courage to say, I believe that in the long term, this is a great company and my investment is going to pay off, I think several people in the next year are going to do terrific. And maybe you'll be a couple months early or a couple months late. Our view has always been, if you're a long-term investor and you're focused on backing great people, building great businesses, being a couple months early or late is less important than being with great partners.
So if we think about, let's put ourselves, I'd like to break this up into how buyers are thinking about acquisition and maybe some of the strategies, but then also sellers. So somebody's looking to maybe sell their business or merge their business, perhaps. How should they be looking at things? So, as a 3PL, a freight brokerage, even an asset-based carrier, if I was thinking last year about selling my business, and then we're in this sort of new world order, perhaps for a period of time, what should I be doing right now? And I know this is a very broad question, and so if kind of as high level we can answer this, I think that will apply to most. Is how should someone maybe be thinking about approaching the market in terms of I'm ready to get out, I'm ready to move on, I'm ready to sell the business. What are some things these companies need to be considering, maybe not just now, but in general?
Yeah, great question, Justin. So look, I think the number one question that a potential seller should be thinking about is, what is it that will make me uniquely valuable to the right buyer? I think it's funny. You spend all this time as an entrepreneur, and I've been an entrepreneur 5 times now, built 5 businesses. Spend all this time and energy building the business, and you rarely think, okay, what's the exit? Because you're so focused on the present state, not the end state. But the number one question that you should be thinking about is, for someone who might buy my business, what is it they can get from me that they can't get anywhere else? And so how do I differentiate? How do I provide something unique? And how do I put myself in a position where a great buyer is willing to pay a huge premium as a result? In practice, what does that mean? Well, I'll give you an example. I'll go back a few years to protect the characters involved. So a dozen years ago, a company came to BGSA, our investment bank, because we have an investment bank, BGSA, that advises companies on deals, and then we have Cambridge Capital, which invests our own money in venture capital or private equity deals. BGSA, the investment bank, we had a conversation with a company called Converge. Converge was an electronic distributor, and they were a great electronic distributor, but guess what? There were lots of electronic distributors. Arrow and Avnet do the same thing, but they're $20 billion companies, and whereas these guys were less than $1 billion. So in and of itself, being a distributor wasn't that exciting, but they had this division that was doing what they called ITAD, IT asset disposition. And we looked at this is back in 2009, and said, this is a crown jewel. And in the right buyer with the right story, this could be a super valuable growth driver, because what ITAD is, it's really reverse logistics. They were going to large companies like GE and Exxon and CVS, and they were saying, let us manage your IT equipment. And so you buy all these servers, and every 3 years you replace them. And so that process of replacing them, you have to identify the assets, figure out when they're due, bring them back, wipe the data off of them so there's no risk of data leakage. And then you have to do triage and decide, hey, can I resell these to somebody else? Or are they truly at the end of life? Do they need to be recycled or something else? So that whole process of managing used IT equipment life cycles in 2009 was a very small, poorly understood niche. But we looked at it and said, hey, this could be the next big thing in reverse logistics. And so we really helped them craft the story around A, how ITAD was going to be vital to the future of electronics, B, how Converge was the market leader in ITAD, and then C, why the right buyer would be able to gain tremendous value from owning it. And guess what? It worked. And without disclosing exact numbers, I'll tell you that they had gone through a deal process with another large investment bank the prior year, and had gotten valuations in the range of what you would expect for an undifferentiated electronic distributor then, say 4 or 5 times. We got them much, much higher than that. Like, call it, I guess I shouldn't say the number, but let's just say so much higher that when we did the closing dinner at Burns in Tampa, and it was a $20,000 closing dinner. I got stuck with the bill, and I didn't mind because everybody had done well enough that it was okay. And so, But the point is that sometimes just doing the work to figure out the message and then making sure that that message resonates with the buyer could be the difference between your company being worth 4 or 5x and 14 or 15x. And that kind of impact really can only come from doing the work and preparing in advance of a sale. And that, not surprisingly, is where we have focused on our investment banking side at BGSA. And I think the results speak for themselves. It's the reason why BGSA has done over 50 deals.
You actually made an interesting point there. There was so what's your unique value prop to the market, or in this case, the market being a potential acquirer? But you also said that maybe your buyer isn't who you might think they would be, in a sense that it's not necessarily another electronics distributor just looking to gain market share. Maybe it's somebody who's in logistics, or if you're a trucking company. The thing that kind of popped in my mind was, a trucking company was typically going to sell to maybe private equity if it's large enough, but mostly probably another trucking company. But maybe it's to a manufacturer that wants to take on a private fleet. I'm not being very creative here, but you kind of get the theory. And so I think that it's not just about figuring out what that unique value prop is, although I think that's critical to not commoditizing yourself, especially in an industry that can very easily get commoditized. But it's also finding potential buyers where that fits in a different kind of way. Okay, so let's be the other side of that. So when is it a good time? And again, I want to think about this through. I think the mid-market is the right place. When is it the right time to think about acquiring a company? Where do you want to be? What are some of those maybe indicators that you're looking for to say this is now the time to do something like this?
Well, let's say you're a market leader in your field. It could be truck brokerage or freight forwarding or warehousing or some other area. And you're great in that arena, but you want to either, number one, scale up because, maybe you're top 20, but you're not top 5. So how do you scale up and get bigger? Or maybe you want to move into an adjacent area. Maybe you want to say to your customers, hey, I can solve a bigger problem because I could bundle these pieces together. I'll give you a couple examples of each. So first of all, in the consolidation arena, a good example would be the LaserShip OnTrack deal last year. So LaserShip and OnTrack are both really in the realm of next day parcel. And they're great companies, but the three giants are UPS, FedEx, and DHL. And the gap between those three and everybody else in size is enormous. So LaserShip figures, hey, if I buy OnTrack, I can take what I'm great at, but add more to my network, create a broader footprint, more density, and a more complete solution in that arena. And guess what? Pretty good move. On the other hand, an example of somebody in one area looking to make an adjacent move, I'd say Maersk. Not a mid-sized company, but nevertheless an example. What's Maersk known for? Well, they're known for the steamship business. I've known Maersk for over 20 years. They actually bought my first startup, Threeplex, 20 years ago. So known them for a long time. But Maersk fundamentally is a shipping company. And Maersk decided they wanted to move into adjacent areas of logistics. One of the areas they really cared about was e-commerce logistics. So guess what? They went and looked at a series of companies in that realm, and they found a company in e-commerce logistics called Visible Supply Chain Management in Utah, and decided that was the place that they were going to go for it. And they bought the business, paid a strong double-digit multiple, but it paid off for them because it now gave them entree into a brand new market. And it gave them the kind of cachet such that, look, maybe they could triple that business just by using existing customers that they cross-sell between Maersk and Visible. So I think those are two examples. One where you're great in one area, but you want to do more of it. Another where you're great in one area, but you want to move into adjacencies. And I think those are both viable strategies for great and mid-sized companies.
I want to ask on a more sort of personal note, you've obviously had a ton of success in the space, and the time that you and I spent together, I was always impressed with just how many things you seem to have touched along the way. Again, we haven't even mentioned a lot of the great work you do around your conference, and there's just so much stuff that seems to surround you. As a person, what's driven you? Like, what are some of your guiding principles? So now we've sort of talked about, how can companies that are selling think about selling? How are companies that are buying thinking about buying? But how can entrepreneurs thinking about entrepreneuring? So what is it that let's talk about you a little bit. What do you equate the success that you've had to?
Well, look, first of all, thank you, and those are kind words, Justin. And secondly, I would say I've had plenty of failures too, but I think the key is having a point of view, knowing what you're going for, and then if you fail, know why you failed, and then if you succeed, know how to do more of what that was. Just give you an example. I mean, for me, I could break down my entrepreneurial journey into a handful of defining moments. One of them was in '99. I remember I was in my first year in business school, Harvard Business School, was watching other successful entrepreneurs launch businesses. Dave Perry built a company called Chemdex. It was one of the first B2B exchanges, in his case, in the chemical industry. And I watched his success and I thought, hey, I bet you I could do that in transportation. And that was kind of the seed of the idea. And I went and talked to a few people and talked to some classmates and friends and people in the industry. And I thought, you know what? If now's as good a time as any to go for it. I studied what worked elsewhere. People think that an entrepreneur is somebody who loves risk, and I think nothing could be further from the truth. I think an entrepreneur is somebody who doesn't mind risk, but his or her goal isn't to embrace it and do the stupidest, craziest thing. I mean, you're not jumping off buildings and putting your life at risk. You're studying how other smart entrepreneurs made decisions so that you can hopefully learn from what they did and apply those lessons elsewhere. So I studied Dave Perry and Chemdex, and that gave me the vision, the blueprint, the courage to go for it with Threeplex. We got a few things right. We also got plenty of things wrong. The biggest thing we got right, though, was going to logistics companies. And everybody in 99, 2000 was saying, I'm going to use the internet to disintermediate the middleman. And, guys like you and me, guys that know transportation know that the 3PL is pretty vital. You can't just, quote, disintermediate the middleman and assume that tomorrow there are no longer any 3PLs. And indeed, the 3PL industry since then has grown at about 15% annually for more than 20 years. So
yeah, there has to be market appetite for something to be disrupted. And when the market doesn't want it, then the disruption is ultimately not going to work. Anyway, I digress. Please continue.
There you go. Exactly. So guess what? Disintermediating the middleman was not a winning strategy. But for me, marketing that we, Threeplex, were going to be partners with the middleman, partners with 3PLs, that was something that really resonated with them. Because first of all, it made sense. 3PLs weren't going away because of the internet. Second of all, they were looking for advice. They were looking for help. People wanted to know, how do I make sense of all this technology that's out there? So we really decided we'd be the 3PL friendly TMS. And if this sounds familiar to you, Justin, it should, because obviously your success with Rose Rocket as a TMS has been terrific. It also led me 20 years later to get involved with co-founding and investing in Green Screens to provide technology for 3PLs to help them compete and help them succeed. And guess what? Same idea, but I learned a few things in those 20 years. What we got wrong with Threeplex was it was great marketing, but it was terrible sales. In other words, we were trying to sell $1 million software to 3PLs, and they didn't want to pay it. They said, hey, we'll use your software if you could help us go win Walmart or some other major shipper as a customer. But they didn't want to pay it. So in the end, one thing that I learned from that was have something that's more narrow and focused that has instant payback. That's what we're doing with Green Screens now. Green Screens is not a TMS. Green Screens wants to work with great TMS providers like you, like Rose Rocket. Green Screens is just focused on doing one thing extremely well, which is predictive pricing. And because they're doing that one thing extremely well, they're solving a pain point that every 3PL, every broker, and really every shipper has too, which is I got volatile pricing and I want to be more accurate. And I'm in a world where inaccuracy in pricing, the average price has a 20% error rate with the kind of the industry standard tool that's out there. And 20% error rate if you're a broker operating on 14% margins, means you're pricing at a loss often. And so if green screens can cut that error rate by 75% because their AI allows them to be much more accurate on a real-time basis, then the pitch is simple. You make more money, you make faster decisions, you could generate a lot more revenue per person, your win rate goes up, and it's just a win across the board. That's not a long, complex sales cycle. I mean, most 3PLs, most brokers typically get that instantly, and in some cases decide instantly. Whereas, what I was doing 20 years ago, I mean, the threeplex sales process was a 6 to 12 month sales process. So anyhow, you make mistakes, you learn from them, and you iterate quickly. And that really, if I were to summarize my entrepreneurial journey, I would say that was probably the most important lesson.
Well, one thing I've noticed about you, and actually listeners will have noticed it even in this show, is you're very proficient at plugging things. And so if you kind of listen back on this, it comes off enthusiastically, it comes off incredibly naturally, but there's this sort of consistent plugging of whether it's investments or sort of these experiences. So through this show, even I would listen and say, man, if I'm going to sell my business, this seems like a really good guy I should talk to. Or if I'm going to, buy a business, I should probably talk to Ben. And then so there is this, and I mean this is I mean this in the absolute highest regard, but there is a certain natural salesmanship to kind of your way of presenting. And I found that when we first started communicating, I first got to know you, I found that very attractive. I liked talking to you because it had this sense of you do a very good job of exuding success without being overly greasy about it, quite frankly. And it's nice and it's refreshing and it's honest. And I actually really, really appreciate it. And I think the listeners will too, because it's to the point. And I think that's maybe you didn't mention that there, and maybe you don't even notice it perhaps, but it's I think it does set you apart a little bit, and it's a strong skill set that you have.
Well, thank you. I think if you believe in what you're doing, then kind of like raising money for nonprofit work. I mean, you alluded to that, and I mean, I've been involved in a lot of nonprofits, and I have friends who say, "Well, I believe in the cause, but I'm just not willing to ask people for money."
Yeah.
My view is, if you believe in the cause, there's nothing better than to say, "Hey, I'm putting my money where my mouth is, and I think this is a great thing to do because it matters and it makes a difference." And so, look, it's different when you're doing that for something like the Ukraine Logistics Coalition, which we've raised over 20 million or donated over 20 million in medical supplies to help the people in Ukraine and sort of survive this onslaught of the last 9 months, 10 months. But I mean, to me, it's just a natural outgrowth of putting your money where your mouth is, whether it's in business and entrepreneurship or in philanthropy.
Let's talk about some of the nonprofit stuff you're working on. Again, the list was extensive, and maybe sort of talk about a few of the things that you started that you're maybe most proud of, or that you're currently working on that's very top of mind. Would just love to hear a little bit about some of that work you're doing.
Sure. Well, my been involved in a lot of nonprofits over my career. I started a nonprofit called Gesher City.
Can I just ask how you got what got you off the sidelines to do this stuff?
I appreciate how you asked that question, because the story of the man in the arena, which is the Teddy Roosevelt speech, which I will massacre, but will summarize, where he says, "It's not the critic who counts, not the man who points out how the strong man stumbles, where the doer of deeds could have done better. The credit belongs to the man who's actually in the arena, whose face is marred by dust and sweat and blood, who strives valiantly, who errs, who comes short again and again, because there's no effort without error and shortcoming." I'm not the only one that admires that speech. Tom Brady has it as one of his motivational sources, and I guess he got it from the University of Michigan, where it was in the football stadium. But my view has always been, be in it. It's far better to be in the arena than to just be a bystander, a commentator, a critic. And so, I mean, look, when I was in college, I don't know if you would call this a startup or a nonprofit or just a provocation, but my sophomore year, the chairman, really the senior fellow at Yale Corporation, was responsible for corporate felony. And a lot of people saw this and were frustrated and disappointed about it. So I thought, let's go do something about it. And we started a student group called Students for Business Ethics, and we worked hard and gathered support, and a long grassroots campaign that included crazy stunts like getting the whistleblower to pay for an airplane to buzz graduation with a banner calling on this guy to resign. I mean, this is probably a longer story than makes sense for our conversation right now. But bottom line is 5 months of hard work and crazy stunts, frankly. In the end, we succeeded, and that senior fellow agreed to resign. And it just comes down to you see a problem, you could complain about it, or you could say, let's solve it. Years later, if I just fast forward to today, Ukraine, we bought a logistics company last year in partnership with management, really a recapitalization in partnership with management, with the founders, and companies Everest Transportation, terrific team, terrific business, truck brokerage focused on the consumer goods arena.
I actually know them pretty well. We tried to sell them a TMS at one point, so
I recommended you.
I've been to their office. Yeah, I've been to their office, and I went all the way to Chicago, and they told me, no thanks, we went with someone else. It was a long trip to hear that, but it makes for a good story later on.
Well, you as you know, as you and I have experienced, right? Sometimes there are people you really like, and sometimes the deal doesn't happen now.
100%.
Maybe it happens later. So
yeah, absolutely.
But anyhow, part of their model was that they had 150 people living and working in Kyiv in Ukraine, and that was an advantage because it gave them highly trained, highly educated, lower cost, highly loyal workforce that really meant that they could go to their customers at a lower price point with better service for a higher margin solution for them as well as for their customer. I mean, it was a great win-win, until Vladimir Putin decided to launch war on the people of Ukraine. So on February 24th, when that occurred, I mean, my number one goal was we got 150 people among 40 million in Ukraine whose lives are at risk. We got to take care of these people. We got to protect them. So for me, job one was evacuate everybody that we could. And we teamed up with another nonprofit called Project Dynamo to do that, which does amazing work. They evacuated thousands of people from Afghanistan the prior year, and Americans and Canadians and other Westerners. And so anyhow, we evacuated everybody that we could. And then at Everest, we set up housing in the west of Ukraine so that people in Kyiv, which is central Ukraine, could flee to somewhere safe but still stay in the country. And some people did that. Some people didn't want to go anywhere, and some people went to Poland or elsewhere. But after those first few days were so scary and harrowing, none more so, of course, than the people under fire. But for all of us who cared about them and the innocent, good people of Ukraine. The second question, once we got through the initial crisis, and from a business standpoint, then tried to figure out how to rebuild and set up an office in Krakow and take care of the people and provide jobs and opportunity, was okay. There's got to be something bigger to do here. And you and I are in the supply chain world. So is your audience, or much of your audience. So one thing that we can do is contribute what we're good at, what we know. So we decided to start something called the Ukraine Logistics Coalition. Brought in some other terrific partners and co-founders, and the goal was simple: use what we know in logistics to help get more vital medical and other supplies into Ukraine, which is really life-saving. For example, getting just basic needs, pharmaceuticals, needles, syringes, bandages. I mean, things that you'd need for a field hospital, or just let people take care of their basic needs, all of which has been disrupted. So thankfully, we were able to get a lot of transportation companies to agree to donate their resources for free, so that if we could get medical supplies donated, we could then tell them, hey, we're going to provide free passage from wherever, Chicago or Toronto or Miami, over to Kyiv. And we've done that thanks to the help of partners across multiple areas of air, ground, and warehousing. And if you go to logisticscoalition.org, you'll see more about that. So that's a good example of trying to take what we have, what we know, and where we have expertise, and contribute it to help make an impact. And so, as it says in the Bible, it's not your job to complete the task, but you're not free to desist from it.
That's pretty remarkable, and again, the volume and how far that you went with that is I don't know, man. That's quite a story, and this is still going on today. I'm assuming this is still active. Is that
Still
the
active.
case?
Still active.
That's amazing. What else are you working on in this? I'm really interested in this. This is a side of you that I don't know. What else are you working on in this?
Well, on the Ukraine front, I mean, the number one thing today is the medical supplies, because it's life-saving, and the return on dollars, is so great. I mean, if for a few dollars you can get a first aid kit that saves a life, it's hard to get higher impact than that. So for me, priority number one is getting more medical supplies in, and then providing more transportation to support and facilitate that. Number two is energy. There is going to be a cold and potentially deadly winter in Ukraine. It's exacerbated by the fact that Russia's been actively blowing up the energy infrastructure in Ukraine. And guess what? It's not very cold in Florida. Like we would be fine if there was no heat in Florida. You'd be less happy in Toronto, but you'd really be in trouble if you were in Kyiv, which parallels to a few hundred miles north of where you are, and the level of risk of people freezing to death is quite high. So one solution is to bring in generators and other forms of heat and electricity. So that means A, getting, sourcing them and paying for them, and then B, transporting them. So I would say those are two huge needs. And we're working with partner organizations. One partner organization is the JDC, the Joint Distribution Committee, which does fantastic work. I was just at their board meeting last week and talking with them about, basically JDC is going to spend close to $10 million on, portable heating and electricity generators in order to bring in to make a difference. So I think that's kind of, to me, the headline for right now. There's a lot of other stuff that I'm involved in and that I care about, but in terms of impact on saving lives, I can't think of anything bigger than that.
That is big work on a very different track. I have to mention, and I also have to mention I haven't been to. Well, you have to be, I would think, is with our industry anyways, somewhat of a famous, and I must say to the listeners, exclusive invite only conference that you put on, but very well received, very well regarded. Can we talk a little bit about what your conference is, and I'm curious just to sort of how it got started and turned into such a special event by the sounds of it.
Sure. Well, thank you, Justin. So it got started because 18 years ago, I was at a Goldman Sachs transportation conference, because I think I was on a list of transportation CEOs, even though we'd sold our business a couple of years prior, but the databases live forever. So anyhow, I went, and my wife and I didn't have kids yet. This was back when my wife would travel with me. And, so we went to this event, and, it was fine. And if anybody's listening who's involved with Goldman, I don't have anything bad to say, but it wasn't great. And Elizabeth said to me, I thought these guys were supposed to be the best of the best. Is this really consistent with that? And I sort of a little bit snarky, I said, okay, well, you think you can do better? And she said, yeah. So I said, great. Well, why don't you do it? And so it was a little bit of a dare, but the serious idea behind it was I had seen what Allen and Company had done in tech, media, and telecom to become, really at the time, a thought leader with a great investment bank, great investment side. But the jewel for Allen and Company was the Sun Valley Conference, the tech conference where all the tech titans would go. And even, today, Jeff Bezos and Bill Gates and Sergey Brin, like that's kind of the place to see and be seen in that arena. So we thought, wouldn't it be great to build that kind of caliber of event for our industry, for the supply chain. And wouldn't it be great if it was for all areas of supply chain, not just the guys in trucking or the guys in technology or the guys in one other area, but really a CEO level event where you could get together and talk about the big issues with people that you consider the best and brightest in the field. So we started it in 2007. And so here we are, it's 17 years later, and I think, first of all, it's taken on momentum of its own, because when you go and have a great experience, you learn a lot, and you want to go back and be a part of it. That's terrific. But then also the deal ecosystem. I mean, deals like the Uber Transplace deal came together. There are lots of high-profile deals have happened there. So a lot of people who are looking to be a buyer or seller, or to raise capital or to invest, find that a great place to be. And then finally, it's a catalyst for people to, I think about maybe a little bit differently, about the industry. I mean, remember back when we started doing this, CLM was still called CLM. It was the Council of Logistics Management. It hadn't yet changed to CSEMP, of Supply Chain Management Professionals. We were really trying to help rebrand how to think about the supply chain world and to highlight those points of connectivity. And I know that I've learned a lot from the convergence between some of these different areas. And if you hear a CEO in one area of supply chain and think, how could I apply this to another area? That's valuable, not just for me, but for others. I mean, I remember, in 2010, a guy came to our conference and sat in the back, with thick glasses and, notepad full of notes. And, a lot of people said, well, who's that guy? And that guy was Brad Jacobs. And Brad Jacobs decided shortly thereafter, on the companies that, well, the plan, the first company that he was going to buy, and obviously that became XPO, and the rest is history. So I think, look, it's a great way for people that want to be either active on the deal side, buyer, seller, investor, raise capital, et cetera, to be in the arena, to come back to that phrase, and also a great place to learn from other people that are in the view of many of the best and brightest in space. Coming up next month, it's January 18th to 20th in Palm Beach at the Breakers. I have some people that are mad at us right now because historically there was a lot of interest from the venture capital and private equity community. We polled our attendees last year, and the feedback was they really wanted it to be mainly CEOs of supply chain companies. And so we said, well, if you're working actively with one of the companies here, great. Otherwise, it's only going to be for those supply chain operators. So the operators, I think, are appreciative, but we have some unhappy deal folks. But anyhow, you kind of, strategy is about knowing when to say no as much as it is anything else. And so I think we'll have 300 plus CEOs and supply chain leaders here next month. We're super excited about it, and certainly, and you're welcome to come too.
I just was having a conversation before we went on, because I said, Ben, he may ask me about if we're going this year, because I fully intended to last year and it didn't work out, and I just looked at my calendar, so I'm organizing to do it, and I think I'll find a way to make it this year. I would love to. I've really wanted to go. This has been kind of on my in terms of nerding out in supply chain stuff. It's a bit of a bucket list thing for me professionally. So I want to see it and I want to be a part of it. So maybe we'll get to meet in person in the next. It's pretty soon, actually. It's about 4 weeks from now, I think, isn't it?
It's 4 weeks from now. So yeah. I absolutely, you're welcome to join.
And I appreciate the time of year you do it as well. Thank you very much from all of us living in the Northeast. We have a large number of Canadians that come down to January, and New York and Boston and elsewhere. Absolutely. Ben, honestly, I could talk to you all day, but I don't know that you feel the same. And I think it's there was a lot there. I appreciate you finding the time for us. And there was a lot of value for our listeners. And where can our listeners find you, and where can they find that really solid newsletter that you guys put out on a regular basis? Well, thank you. They can find me, first of all, you can just email me, ben@cambridgecapital.com. You can go to our website at cambridgecapital.com.
You can also go to our banking site at bgsa.com. And there's a link to sign up for the free newsletter that you mentioned. You can find me on LinkedIn with the handle Ben Gordon 18. And I'm reachable, I'm accessible, and as busy as we all are, I always strive to make time to respond the same day to folks that reach out. So if you're to your audience, if you're an owner, investor, or part of the management team of a great company somewhere in supply chain, and you want feedback, you're thinking about different options, whether it's buying or selling or raising capital or something else, I'm more than happy to help, more than happy to be responsive, and more than happy to connect you to our team, because we really have a terrific team, both on the investment banking side at BGSA and on the venture capital and private equity side at Cambridge Capital.
Ben, it was an absolute pleasure again. Thank you, sir. I think I'll be seeing you soon.
Justin, thank you. Sounds great.
Take care. Thank you for listening, and be sure to subscribe. And if you like what you're hearing, leave us a review.